Hey now, by the end of this video, you are going to understand how extremely important your risk to reward ratio is. This is Trader's Landing. In this installment of Trader's Landing, I am quickly going to explain the HLHB trend catcher system from Baby Pips, including the indicators used and entry criteria with examples. Then I'm going to test it 100 times in a row at 100 times speed, followed by an analysis of the test data, a review of the equity curve, some brief ideas for improvement, and conclude with my thoughts on this strategy. I found this system on Baby Pips, and you can find the link to the thread there, along with the system specifics on how I tested it in the video description below. So this system requires 4 different indicators. The first 2 indicators are the same. They're actually the standard exponential moving average. So we're going to add 2 to the chart and configure those in a second. The third one that we're going to add are ATR bands by Alexander TH, and we'll configure those in a moment. And finally is the RSI, Relative Strength Index, which also needs to be configured for this system. So let's go do that now. We're going to configure the first EMA, and we're going to make it an aqua, and we are going to make the length 5. Then our second EMA is going to be a 10. And we are going to make that a lime green. We're going to use the ATR bands, and that will be for our stop loss. We'll make both those lines white. And we are going to set it at 2 times ATR for the upper and lower bands. And finally, the RSI, we are going to change the length to 10. I'll get it, 10. And we are going to change, I'm just going to change the RSI line to yellow so everyone can see it better. Remove the upper and lower bands. We're going to keep the middle band at 50. I'll make it white again to see it better. Solid line. And remove the background. And now our indicators are set up. We could get into some examples. So let's go over the rules for a long entry. We are just looking for the RSI to move above the 50 line, which it does right there. And we are looking for the 5 EMA in aqua to move above the 10 EMA in lime. Everything happens on this candle right here. So that's our trigger candle. We are going to put our buy tool there and put our stop at 2 times ATR. And we are going to target 4 to 1. And let's see how this plays out. And that one is a winner. And we have one more long example here. We have the RSI moving above the 50 line. And we have a cross of the moving averages. So this is our trigger. We are going to enter the close of that candle and put our stop at 2 times ATR, which is that level right there. It's actually within the candle. And we are going to target 4 to 1. And let's see how this one plays out. And that one is another winner. Now let's flip to shorts. So for shorts, we're looking for the exact opposite of longs. We're looking for the RSI to move below the 50 line, and for the 5 EMA to cross below the 10 EMA. And everything happens on this candle right here. So we are going to enter at the close of our trigger candle, put our stop at 2 times ATR, and we are going to target, again, 4 to 1. Now let's see how this one plays out. And that one is another winner. So let's do one more short example. So again, we have the RSI moving below the 50 line, and we have a cross down of the 5 EMA below the 10 EMA, and this is our trigger candle right here. So we are going to enter at the close of this candle, put our stop at 2 times ATR, and target 4 to 1 again. And let us see how this plays out. And that one is another winner. And now it's time to do what we do. This test was done on the Euro USD using the 1 hour time frame. There were 29 winners and 71 losers for a winning percentage of only 29%. It took 5 1/3 months to find those 100 trades. There were 3 winners in a row, and most losses in a row was 11. So this is where it's very interesting. We had a 29% winning percentage, but our gain on account in 5+ months was 45%. We almost halved our account in that time, which goes to show you that risk to reward is such an important part of trading. So let's review the equity curve. If you watch my other videos, this equity curve looks very familiar. We have some drawdown to start with, followed by some impulsive moves up. But the story it doesn't tell is that these impulsive moves are happening because of our risk to reward ratio, not our win rate. When we have a couple of winners in a row, it really moves the numbers. How can we find the crumbs and make this system better? I think using 2 small EMAs with the modified RSI gives us a ton of signals. I would be curious to add a simple market structure component to this system to only get in on established trends. I suspect our win ratio would increase and thus exponentially increase our gain on account. When your risk to reward ratio is so high, you only need to improve your win rate a little bit to really get those gains. So you can now see how extremely important your risk to reward ratio is. This thing had an awful winning ratio to the layman, but traders know that winning ratio is just one component, and sometimes it can be a superfluous one at that. Thank you for watching. If you want to see more content like this, it makes sense to hit that subscribe button and turn on notifications. And if you enjoyed this video, please give it a like. Let me know if you have any questions, comments, or concerns in the comments section below. Bye for now.